Hey guys, so let me look through the Crypto Sniper videos. Wow. Bitcoin bulls have another severe warning of macro weakness. Leave belief systems. Don't be a Bitcoin bag holder. 5 months ago. In trading, it's not what you make, it's what you keep. 6 months ago, there's a ill wind out there. Crypto bear to destroy hodls. HVF method will give you the shorts on a variety of cryptos. Prelude to a fall. This is essentially warning and weakening, rally posted, downside targets, etc. 8.2s when we were up at 10s. These are all a while ago. The key problem we have in the crypto realm is that there are inexperienced technical people that are having first time experience with trading. And in our webinar that we do, and I will be doing on the 5th of December, we say, when you invest in crypto, you need to acknowledge the certain following things. By becoming, whether you invest or later end up trading, because people start by thinking they'll invest. And then when things go wrong, they end up getting in and out, and that ends up being trading. They go from being a long-term hodler into FOMO, fear-driven, fear, selling on fear, buying on fear of missing out, emotional trader. They don't realize they're becoming traders. They don't realize they need to have a basis and a method to actually trade. And this is really punishing. And then they look to others and people to follow. And actually, I'm afraid to say most are being quite disappointing with what they've seen. Anyway, let's turn to the charts. Don't trade your belief systems. You need, if you become an investor in crypto and then you're actually occasionally buying in and getting out, and you're doing more than one in or out in a single month, you are actually trading. You are not a long-term or even medium-term holder where you buy and you sit through. And I would say with the blow-off events, if you got sucked into the blow-off events, such was your entry by getting in to the boom, you are too late to be a long-term investor. You're going to see a large amount of your capital wash out potentially. So that's where trading defense. If you bought in 2010 or 11 and you've never sold, you're still up and smiling, just not as broadly as you were at the end of last year. So there's a massive difference. But everyone gets tempted to thinking, damn, I wish I'd taken a bit off the table, and gets sucked into the lower time frames and ends up becoming a trader, sometimes by not even setting out to do that. Anyway, I had some interesting EOS friends. Thought I'd give them an update on how things are looking there. You're getting a little bit of a hammer pushback, but I'm afraid to say you traded 3s. So when you were 6s and we said you might see 2.8s, you have now traded as low as 3.4. So you got to just bear that in mind. You know, what you thought was impossible then is now becoming possible. Why? Because we're having a wholesale crypto contraction. That's why we're having a wholesale crypto contraction. In fact, I'm jumping around on the charts. Let's go straight here. This is where we're at. This is a market cap of Bitcoin. It's a better chart. I wish I'd got to it earlier. I've mentioned it in the previous vid. Wish I'd got to it earlier. But there is further contraction to come. You're at 78. And on balance of probabilities, given the high quality of performance, I would say it's exceedingly likely my profit targets will be made in running this level of market cap for BTC. So yes, while it was defended like hell to try hold on to the 100 billion market cap up top here, and that's there you can almost see the key level of significance. You'll learn about these things if you're prepared to learn. Otherwise, you will be destined to repeat the pain and the emotion-driven events. You are amygdala responding in panic. You feel that depression after you finally sell out, after chasing a pump and then being shaken out on a dump, and you think, damn, I'm smarter than this. I got caught again. I've been through the cycle again. You realize you're in the washing machine. I've been there. I understand that as a trader. I've been there and understand it and repeated it enough times that it's been a real issue for me. The weed eater men are showing up. Thank God for that. Excuse me for that interruption, chaps. I'll try to take up where I think I left off. We were talking about Bitcoin market cap, and that was the run of the second interim, and that's been really highly impulsive. We fell off the cliff here. It was good quality pattern, and I think I'd already mentioned that. Also, something to point out, and this is on your altcoin market cap. Clear-cut grind line, a break, but let's just take it up to your day long, and even better, I'm going to switch this to 3 days long, and I want to show people that something that I've been showing to my premium guys for a while, and in fact it happened first on Ethereum, and we'll go to Ethereum next. But this was the big pump upside setup that was occurring here. This was a significant event, and it overperformed immensely, and this is what you'll learn when you get extreme overperformance. It's beginning of end. It's beginning of end for that bull market. It begets future long-standing underperformance of a sustained nature that will see bottom callers repeatedly be inaccurate for their bottom calling. And this is what happened. Overperformance, falling wedge, pump. Yeah, it's all good. The long, no, back down. There's a grind line. You can see him spill through that. Now, at that grind line spill, I said, wow, if this runs this low, we could 1 point even run this funnel. I said that on Ethereum first long ago, and it was the first to do it. We'll show you the Ethereum chart now, and I said, I wonder if the rest will follow. Ethereum was extreme to the upside. Everyone was buying Ethereum because of the ERC. They wanted to do list ICOs, and then they were all dumping it to get out of their ICOs. So an even bigger pump within a very volatile market. We'll show you that Ethereum market. In fact, let's go there and we'll come back to the altcoin. Busy as heck, this chart, but let's just go straight up to the big time frames and show you. I've actually got a few. So here you were. This was the funnel. That's too big a time frame. Let's go daily, guys. No one can see or follow that. And you can see the annotations that we did here. This was the critical big upside HVF that existed for Ethereum. And I remember this point when we bounced on this key level of significance. It was the 500, and we rallied. And so many people said, no, what you mean you're going to see 400? It's never going to happen when we were up in the 700s. This was a head and shoulders. This was the last upside HVF. This was one of the most detailed draws I've done. I did this again retrospectively. Last upside HVF that made target left shoulder, head, right shoulder, and that was the beginning of the sell. There was no big recovery second stage for Ethereum, while Bitcoin was kind of bouncing at these levels and holding a line. Ethereum kept going down. Why? Because it had this huge upside HVF and a mega. This is a log scale, guys. This target was projected for 589 and went to 14s. Yes, you got another upside HVF over there that said you're going to get a bit more, 1062, and you actually overshot even on that. It was huge. Then you got your first inverted in a new trend that made target. People were like astounded that I said that at 876 that it would trade 400. That was like lunacy. Now we've just run a one draws downside target right here on Ethereum. We'll have a look at it. But the key point I wanted to make was this. This was your upside funnel. This is in a logarithmic chart. I really need to flick this just for a short bit to normal chart, just so that you can perceive how extreme this move was. Let's take the logarithmic away. Have a look at it without the log. Let's do it again and go regular. That's when that HVF occurred. That's where that high was. This was castles in the sky. Castles in the sky head up rate. That's not to say, hey, one day it can't go strong again and even be more sustainable next time, but this was a major boom. So that was your funnel, and we suggested over here if you run that funnel, it's a very bearish thing. So let's bring it so you can now know what that green and red line is. Here it was, grind line, downside. It had broke. It bounced on the green line, then it went through the axis, and then when it stabbed through that, I said that's a very negative event. We've invalidated that funnel. It's going to continue to go down. This is after saying it could do it here, especially if we ran that lows. That was a serious low, and it was on the funnel, and we came all the way back down out of this structure. So it was very bearish. We've been setting up grinds and spilling. downside. The key trend is down, and that's what it's continued to do. It then went into this holding pattern. We had our Bitfinex shenanigans that gave it a little bit of heat for a while, and all it did is set up another structure for downside. In fact, you got a head and shoulder here, which when I did the live stream on Theory Weekend, I highlighted Ethereum in a big head and shoulder. Oh, excuse me, got a tickle. Yes, from that live stream. Oh, we had that head and shoulder down, target made, ran that go long entry. So this was your H3. You could have got short early on that. So your stop was essentially here. The stop for this was here on your peak of your H3. I'm going to make that a bit fatter actually so it can stand out. And your green for go was down here on this level over there. So that was it. And it's just been a downside story. So where is the target for that? Where's it gone? Well, let's have a look. Let's have a look and answer that question for you on Ethereum. And Ethereum was, as I say, the earliest canary in the mine, because it had one of the biggest pumps. I remember it just kept running when I was in New York. That was the ERC token. Now that was your neckline. What I'm going to do is I'm going to change that to our traditional neckline color, which is the blue, and I'm going to put another orange line, which is our axis, and you'll find out how it is doing. So that should be an orange. And that is your stop. That's your entry short. That is the neckline, and this is the halfway point from 208. So we actually need to, I'm going to take these lines, these levels off, because they've since been invalidated, and draw them down to here. My suspicion is we've or not quite, we'll have to see. What's the high point? High is 225, low is 193. It's 25 and 7. It's going to be 32. It's going to be 16. This should be on the 16 is the halfway mark. So if I take, confusing the hell out of myself and my maths again, 193. So we're minus 7, and that was 22.25. So we're going to, it's 18. So it should be half of that. It should be 209. That's it, and it's roughly right, 209. So that should be there. And that interim should be there. So we'll have to see how we've done. Have we made an interim or have we made a full target? We've certainly made the second interim. It's not clear if we've made a full target. I'm going to take this line, which we were just using as a space holder there. Not yet. Some more downside just to be part of this pattern's completion. It's got more downside with this H3. It's an incredible head and shoulders. Take a look at this on the shorter time frame. Left shoulder, head, right shoulder, neckline on the blue axis there, head and shoulder target made. As the target's made, you're triggering the main event. You go straight into a grind line, which leads to the eventual sell-off. And note how you got that weak rally there just before the spill, and that's it. You've been hammered. Double-digit run, sub 100. That's one of our key levels that we still think will be on. So the crypto bear has been absolutely punishing, and Ethereum has been one of those that have been hardest hit. So that takes us back to the altcoins. We were expecting the rest of the altcoin market cap to follow, because this occurred quite some time ago. This first stab through the stop was way back in August, and in fact it kissed the beginning of the funnel, where it was telling us it's going to start tapping on that in the beginning of August. So if I take you back to the altcoin market cap, is that the altcoin market cap? It is indeed. We have now just probed through that. If the altcoin market cap is to do what Ethereum has done, which has just been unraveling its ICOs. Remember, all those ICOs had to get out of their coins into Ethereum, and then out of Ethereum into either Bitcoin or fiat, to not lose their money. And there's been so many scammy coins that probably knew they were scammy. And that's why they're done. I mean, when I talk about EOS and I see the one character commenting on it and saying, no, it's going to $100. I saw how those guys spent money. I ended up sitting on the roof of an apartment drinking free spirits, and it was all, they raised all of this money and they were just throwing it at a huge expensive PR shenanigans, and it's whiff of .com. It took me straight back to the craziness of big PR shindigs with entertainment at exotic locations with huge money. This isn't how people look after real money, hard-earned real money that are just focusing on developing the tech. This was a sales effort. It was a huge sales and marketing effort for EOS. And I'm comfortable being shorted. And you've got these other alts that have to go through this similar Ethereum type process. And they've just probed now where Ethereum was. Look where Ethereum is now. Let's put it on the log scale again, so it's a little bit more looky-likey, and let's take it down to the same time frame. So what were we on time frame wise? We're on the 3-day there. You bring it back up, and we get, well, I'm on daily here, but look at it when it first broke that. Look how much lower it's gone. Look how much lower it's gone. There's real scope for a punitive downside in all of this. There is real scope for more punitive downside in this, and you can't call an end till the trend. And this is a proper cliff edge sale. So quite a bit of, I don't want to over repeat, but let's have a look at that. Altcoin done. The total market cap, it's already run it. The altcoin's just done it. This has already run it. So Bitcoin of late, which is bundled up in this, has helped drag this one through. So you've got two. You've got Ethereum, standalone, the major alt until recently, smashed it in August. You've now had, and I said, wow, I wonder if all of them do this. What's going to be happening in crypto land? This could be a real bear. And everyone's starting to feel what was already in the cards. And then people say, oh, it's Roger Ver that's done this. Hey, I haven't got a dog in this fight. Or it's Craig Wright that's done it. Hey, they might be funny people with funny tendencies. It's human nature that's done it. It's the pump before that's done it. It's the hypervaluation now that is leading to the need for overreaction. Must go all the way down through full-blown underreaction, defy people's belief with an overreaction to the downside. So people are just like, my God, and they give up. That's when you pick up the pieces for nothing, and then you get real potential for upside. And I'm afraid that's not a message people want to hear. It's not a message that's made me popular. I've seen guys with hundreds of thousands of Twitter followers that kept calling compound fulcrums and bottoms and all of that. They're far more popular, but they aren't technical traders of any great weight. The probability should have been trend continuation. It wasn't a rounded bottom. So I'll show you to another chart. This is the XAG versus gold, the gold index. People don't think it could ever get higher. It's like 60s on near the highs, 70s on near the highs. We're at 80s on that index, and gold went through its own version of this. Welcome to the silver chart. And I've sometimes drawn this parallel. Look at that grind line. Look at that descending triangle. Does that not? You are here. You know, you could be here. There could be more to go to the downside. You could get a fake out rally that gets you all bullish, only for more to go on the downside. I could see this still selling off further silver. Yes, gold's going up. Hurrah. Silver isn't. That means it's central bank buying only, and you're probably going to see in a deflationary environment all of those things go back down again. So there's a real problem here, and this is like a crypto chart. This is a weekly chart. This is what you get on crypto on the daily. Crypto is like a dog. It's dog's years, you know, 7x in time. It's done all of this and heading back down in what's taken the better part of 2007 till 2019. 12 years to happen in metals is playing out in like fast forward, you know, mode. And people will keep calling the bottoms. This is still not a bottom. You're looking at it and you'll think it's a bottom. It isn't a confirmed bottom. It may be. It might double bottom and get real impulsive and start pumping. And then we'll say, okay, but that was a fake. That was a fake because you came all the way back down again. So here's where we're at. Do you want method? Do you want method? Do you want to be able to assess who's the relatively strong coins? In other words, if you trade coin against coin, who are the relatively strong coins? We've said a couple of times that this one's shown real relative strength. So Bitcoin, where is its target to the downside? Look at these long buyers coming in and the short buyers. These are the shorts and these are the longs. People are getting heavily engaged again. That reading is, on that scale, 31,965 new longs, and on the short side it is 30,000 on the shorts. So they're almost evenly balanced, and you've got 31 does 30. You're getting a high level of engagement again. People are being sucked in by the volatility, and guess what? They usually lose in volatile environments. Here's a little bit more for you. We broke out of the grind. Let's just drill this down from the bigger time frame. You can see the grind. So this is Bitcoin on Bitfinex. I'm still using this platform. It's the best for trading for me. The others are just so difficult to use. And this was the setup. That's your sell so far. Let's get that volume a little bit out of the way. You've had two big volume days. You're getting a little bit of buy up. What can happen? You've just run the second interim. You get a rising wedge potential. And everyone will go, that's it again. The worst is over. Come on, ye cryptos. To the moon, etc., etc., and you can get a little bit of rising structure like this, possibly. And I would say be very, very careful. I'll be looking to add a little bit more because I'm slightly under what I'd normally be for a setup of this quality, thanks to that threw me off the cent spike. And the fact that I opened and then I closed some because I thought it would get bought back up. So I got really almost a bit rattled by a process, if it has to be said. You get this weak rising up wedge. It even could be quite strong because it's been incredibly violent to the downside. People are going to think that's it. It's all about recovery. Those news articles you see on the side, recovery. Boom, 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 boom. Up you go. And you get the smash down for the 3755. That's the target. I'm giving you the target on Bitfinex, 3755. It's all the threes. And by the way, just because it gets there, that doesn't mean A, it can't overperform slightly, and B, that there can't be further patterns after that for further lows. That's not a bottom call. A target is not a bottom call. A target is a point at which you cease to get easy money thrown at you for a while. In other words, it goes sideways, it rallies, bounces around, creates new structure. And then and by the way, when you get a very strongly performing inverted HVF, keep on keeping on. That's the game. Keep on keeping on. In other words, keep taking it short. If you've lost money, this will be the way to get some of it back. Don't trade in rage. Take a break, all that good stuff. But at the same time, there is an opportunity. There will be an opportunity coming out of all of this to come back. So that's on the Bitfinex. And interestingly enough, the 3744 was identical on one of the others as well. I can't remember which was the exchange. Might have been even Coinbase or one of the onboarding ones. So there's good angles. There's good geometry in that. What else was I going to tell you? It's a long clip already. So Ripple has shown relative strength, but how comfy am I with these huge sell-offs and then these pounds? It's being leaned on for now, but it is the strongest so far of the majors that you can trade with any form of liquidity and or strength. It is the strongest. So my take is play from fiat to the short side on any rallies is what I will be doing, but I will pick it very carefully. Oh, the other one I really wanted to show and talk about is we had also said NEO was going to go down a lot. I mean, this is all talking about the same thing. We're talking about a major sell-off in the market that has occurred. This is your relative strength, Ripple to Bitcoin, and we see it on it potentially coming down again, and then we will see it looking to do a 4x versus Bitcoin. That could be a kind of flippening. In other words, Ripple catches up to, I don't think it surpasses, but catches up to Bitcoin as first stage. It may later surpass. But Bitcoin might be going down at a rapid rate, and it could be a case that in dollar terms, Ripple is just maintaining its dollar. So we'll have to watch where we're at when this happens. But we see a major break for Ripple coming. You can get in at the 10s and it'll trade through 32s. That's about a 3.2, but I think you'll be able to get in at the 8s on a pullback, possibly in here again. So that's a little bit of insight on where we're leaning, but for now we are trading it everything short, and I'm not even holding Ripple. I think that's exactly what I wanted to cover with you guys. The key thing is method. If you're hurt out there, I'm sorry to hear it, but you'll do it again next time, because the amygdala based fight or flight responses are brain wired into you, and in the absence of a process and a method, you will continue to slump back into your reactional responses. You have to have pre-plan and execute plan. Otherwise, the plan is reaction. Reaction is emotion driven and it's pain driven. In other words, fear of not making money gets you in and pain gets you out. And the pain contest is never worth it. It leaves you exhausted, exasperated, and heavily down, and having to explain to family members how you got so wrecked. Okay, so be careful out there on all those fronts. Be careful out there on all those fronts. Ethereum, all of them, be biased to the short, but you could get rallying now. You could get rallying now, especially as all the retail traders come charging back in. Weak soft rallies. The excitement might be over just at the time that they all want to arrive and go heavily long. If we have a look at this on the slightly smaller time frame, we can see still very topsy-turvy. Be very cautious out there. It could continue to spill. Big volume on that. Note it was a very low volatility. I wanted to show this chart one more time to you, because there was something I missed to show you. This was a very low volatility, consistent sell-off. It's perfect little channel. When did it break the channel? After making our second interim. A stab through on the biggest hammer. That's when I said, hey guys, it's made second interim. Anytime now we could get a rally. Very weak flag, and actually stabbed a little lower, and then got even more volatile, and now we've had our buyback from this level, and now it's churning. So this could be a bit of churn for a while, or it could turn around and just say, I'm done. I'm going to go for that 3744. So you may not necessarily get the rally, but I would say, whew, as good a pattern as this is, we're entitled to a little bit of sideways at some point, because it's done so well for so long. Okay, that's it from me. Long clip. Hope you enjoyed, and we'll catch up soon.